welcome to my YouTube channel. And today here we're gonna be looking at some important stuff to look out for before you take your trades. These are very important stuff that you have to consider before you execute your trades. Okay, so we're gonna start here with the trend. It's very important for you as a trader to know where your market is going. So how do you read a trend? What is a trend? It's where the market is going. Remember that there are three market phases where the market is going to either be going up, or the market is going down, or the market is ranging. When it's ranging, it's moving sideways. That's when people get more frustrated by the market. Okay, so what do we use to check our trend? We are going to use higher highs and higher lows. So that's important for you before you execute your trade, to know where the market is going. It means that you have to go to the higher time frames to know where the market is going. By moving to the higher time frames, you are going to try to figure out where the market is going. Okay, so if we look here, where is the market going? The market was going up here until it broke a trend line, and then it means that now the market is changing a trend, of which it indicated here when it surpasses the last low which was created here. Okay, and okay, this was a low. So the market here was going up with a series of higher highs, higher lows, higher highs, higher low, higher high, higher low, and the last high. And the market came here and break this low, came back inside, created a head and shoulder here inside, and then started going down. So when it was going down again, the market has been creating the series of lower highs, lower lows, lower highs, lower lows, of which this one came in align with this one. Okay, lower lows, lower high, lower lows, lower high, and lower lows, lower high, which came again and align with this one. So this is how we read the trend, with the series of higher highs and higher lows, and lower lows and lower highs. Okay, so as you can see here, the market has been going down. Okay, so the difference here on the trend line is when the market is going up, we want to put our trend line below here. That's very important for you as a trader to know. And when the market is going down, because here when the market is going down, the reason we put our trend line below is we want to see if the market is going to cut off that trend and change the trend. And then again here, when the market is going down like this, what do? We put our trend on top to see if the downtrend is going to be cut off, and we start with the uptrend. So that's the difference with putting the trend line. Okay, and again, while we are reading our higher highs and higher low, what can we conclude here on a daily? We can conclude that the market, since the market is creating the lower lows, lower high, lower lows, lower high, lower lows, lower high, and okay, so on, we can conclude that the market is still going down. So now the market here is still going down on a daily time frame until it crosses the last high. So as the market did here, when it crosses the last low which was created there, and then it disrespected it, and then the market started going down. So the last high which was created here, we can conclude that this is the last high, of which the market came back and it respected it, and now we're still on a downtrend on a daily. And now once you find that, now you know that on a daily you are on a downtrend, you can move to 4 hours and see where you are. Okay, so if you are swinging, you know that if you are on a daily going down, you know that it's fine. You can start looking for the sales at the right levels. You have to also know your zones where you take your trades. Okay, moving on to the 4 hour, we are going to check here. Okay, remember that the lower you go, the more candles you are going to get, the more candles the market views, because it's lower time frames. There's a lot of things happening there. Okay, if we look here again, the market on a 4 hours, remember that they are going to be trending trends. Okay, the market was going okay up here, even though this trend line is okay. Okay, this is my trend line. Okay, so this is how I'm gonna put my trend line. Okay, again the market was going up with a series of higher highs, higher lows, higher highs, higher lows. Since it changed here, it changed from going from downtrend, and then again here we are on an uptrend. So on an uptrend, higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and these small ones inside here, higher high, higher low, higher high, and then until the market came to this point and created double top, of which the last low was around here, which the market broke, disrespected this low, and came and retested that low again and started going down. Okay, and this downtrend again. So now since the market has broken that uptrend on 4 hour, now it's going down on. Okay, so if we come here again and look, what can we say? Okay, on 4 hour we can conclude that okay, now the market here was going up, and then it crossed this trend line and started going down. And then we don't have to forget the trend line on a daily time frame. It's very important for you to remember that there is this trend line here that is over on top here. It's a daily trend line, which is showing that if the market crosses up there, we're gonna have to switch back. If the market come and crosses up here, we're gonna have to switch back to daily and check up there. That's very important for you as a trader, to switch time frames. That's when switching time frame come into play. So far now the market on a 4 hours still showing us it's going down, even though it's showing us that it has been going down and then come up here again, come down here again, and up, and then here where we are, of which the market can do what? The market can continue to go down, or the market can decide to come up here. The market is gonna tell us. But what can we conclude about these levels for you as a trader, even when you're going through levels like this? Because even when the market is going down, sometimes it can create some movement or some unclear movement where you just get confused. So here if we look, we're gonna say okay, there are levels where the market came in touch several times. Okay, here's the level, and again on the below here, okay, there's a level here again. And what can we conclude about this level? We can say that the market here it has been ranging around this level, because there are many touches: 1 2 3 4 5, 1 2 3 4, and this is the 5th touch. The market has came back around this level. And what, okay, remember that even when the market is ranging, there can be a point where it's ranging, but there are outs like this, fake outs like this. Because if the market is ranging like this and then give you a nice 1 2 3 touch, this looked like once a nice sell, of which you could take a sell here, and then after that, what happened? The market decided to come back to this level, of which you can conclude that okay, this is a ranging level, of which what can we say? we have our important level. What are our important levels? Remember, support and resistance, our important level. Even when we are tracking down the trend, we have to remember that support and resistance are important. Support and resistance are important. And when you are tracking down your trend, remember that the market move in three phases: uptrend, downtrend, and ranging phase, where the market is just bouncing up and down on the same price level. Even though it gives sometimes some breakouts, it comes back to those levels and then play again around those levels. So you know your trend, but you also consider your important levels, support and resistance, supply and demand. Okay, so this is my resistance and this is my support here, of which I'm taking into consideration, of which, okay, the market, even when the market is ranging, is going to touch, it may touch 2 times, 3 times, 4 times, 5 times. But you, as a trader, because we don't know where the market is going, we just have to keep on trying to take those entries. But remember that when you are taking those entries, they need candle confirmation. So okay, and again here, if we zoom in, as I was saying, guys, the lower we go on the smaller time frames, the more higher highs and higher lows, the more smaller trends in those time frames. But you don't forget the trends on a higher time frame. You don't forget where you are, even if, because now on a 4-hour and daily, the market is showing us that it's going down. So since it's going down, you might find an entry. Let's make example here. You might find an entry here, of which the market now is giving what, okay, double bottom. Okay, I find, say, okay, this is my double bottom, and again you have a trend 1 2. What makes trend valid? 2 touches, the third touch is a charm. That's okay. And you may say that, okay, right now this is a double bottom, I'm gonna trade the double bottom. You don't forget that the market is going up. Even if you catch this trade here and you buy, you don't forget when you get here and become overconfident and hold. So remember that the trend, it's still a downtrend. It's very important for you to remember what is even happening on a higher time frames, even when you are on the lower time frame. Even if you go to 1 hour, okay, we're gonna go to 1 hour and check what is happening here on 1 hour. As you can see here on 1 hour, there is a lot that is going on here, but the levels are still the same, but now they are more broader and they present an opportunity which is clear. But you don't have to forget where the market is going on a higher time frame, because it's very important. Even when you are here on a 1 hour, you are taking a buy, you know that the levels of importance are marked. So you mark your level of importance, and still there are the market here on a lower time frame is still going with the higher highs, higher lows, higher highs, higher low, higher highs, and higher low. And the trend is still at work where the market, remember that when the market is going up, we need the bottom trend to see if the uptrend is where the uptrend is going to break, and we start to sell. And again, when the market is going down, where is the trend of the lower lows and lower highs going to break, and we start to buy. That's how we use our trend lines, with the higher highs and higher lows with the trend. That's why they are called trend lines. They are there to trace the trend and where the trend is breaking. So as you can see here, we're 1 2 3. So I was saying that in some cases, in some cases you find that the trend is going to have 1 2 3 touches. Remember that there are also these inner trends. I'm not ignoring these inner higher highs and higher lows once they were of significance, but remember, when the market is moving, they are not going to be of use. If I keep on extending my trend lines inside here, it's not going to make any sense. But if I push my trend line, when the market is moving, you have to keep on updating your trend line so that your information can make sense. Your information have to make sense so that you can see what's going on, so that you can avoid confusion. There can be many higher highs and higher lows and touches, so you cannot cater and touches all of them. You have to look for the outermost ones that they are going to give you the information that is going to work for you. So that's all for this video, and thank you for watching. If you get to this point, don't forget to like, subscribe and comment. Thank you.